I taught you a little about chart pattern analysis earlier. Those chart patterns I taught you are how to read short chart patterns. Many times you will be getting mixed signals when trying to read charts using that little knowledge of chart patterns, especially when you are trying to use a short time frame. Those chart patterns I taught you will only work better on long time frames, but this one I am going to teach you now works on both long and short time frames. Once you understand this part of Forex, I will be glad to congratulate you that you are officially a boss in reading price action. Many of what you will be doing in Forex will involve you trying to read long chart patterns rather than the short chart patterns. Let us look at some chart patterns, shall we? Double top and double bottom. For double top, a double top is a reversal pattern that is formed after there is an extended move up. Tops are peaks which are formed when price hits a certain level that cannot be broken. After hitting this level, the price will bounce off slightly, but then return back to test the level again. If the price bounces off the level for the second time, then you have a double top. Just for you to easily remember the double tops, it looks exactly like an M. The pattern forms an M shape, which confirms it as a reversal pattern in an uptrend. Here is a clear depiction of what a double top is below. As you can see, it went down in the long run. So when you notice that a price has hit the resistance level, and on its way down it hits an invisible support, then bounces back to the resistance level again. Immediately you notice that, try to draw your neckline, because you know that once the support line has been broken, it is a good confirmation for you to sell. Sometimes the price comes back to the support after breaking the neckline. I want you to relax your mind for a while. We will treat other chart analysis methods, and you will understand that double tops and double bottoms are one of the things that give you information that the chart is about to reverse. I see this as a warning that your resistance level is going to hold. Then I will use other methods of chart patterns to confirm this. We will treat them later as we proceed. As for double bottom is the exact opposite of the double top. I want you to use your knowledge on double top to tell me what double bottom means and show me a screenshot from your charts. Send me your answers to my DM on Telegram so I can confirm that you are following up. Please make sure you use one of those charts that you drew support, resistance, and trend lines on. Just pick one chart and show me how the double bottom caused a downtrend reversal. When you are looking out for a double tops or double bottoms, you must already have your support and resistance lines or your trend lines drawn already. Then your price starts approaching that level. The chart pattern you should be expecting at that support and resistance level should be a double bottom or double top, depending on if it is a support or resistance line. You cannot be choosing double tops and bottoms randomly on charts. If not, you will get mixed signals a lot. Next is the heads and shoulders, inverse heads and shoulders for heads and shoulders. From the name alone, you can tell what it means. The heads and shoulders is a trend reversal pattern. They are most often seen at the end of an uptrend. It is formed by a peak, shoulder, followed by a higher peak, head, and then another lower peak, shoulder. Note: both shoulders don't necessarily need to be on the same line. As long as the lowest point that touches the neckline that forms after the head and the next highest point is not as high as the head, then the next highest point formed can be considered as a shoulder. Also note, the black line in the image above is the neckline. This is how the heads and shoulders look like on the chart. Inverse head and shoulders. This is the exact opposite of heads and shoulders. I would love you to explain it yourself and also give me a diagram. Send me your response on Telegram so I can confirm that you are following. Join our Telegram trading channel to be a part of our trading community today. Link in the description below. Rising and falling wedges. What are wedges? Wedges signal a pause in the current trend. Yes. You will see wedges when a trend is neither moving up or down, but ranging sideways in a particular manner. The manners in which a price will range sideways are many, but we will discuss more on them later. Now, when you see a wedge, you will not be sure if the price will continue going up or down. What is a rising wedge then? A rising wedge is formed when the price consolidates, comes together, between an upward trend line and a downward trend line, not trend channels. The slope of the support in this case is usually steeper than the resistance. This is what a rising wedge looks like. If you remember the Bollinger Bands, you will recall that this looks like a squeeze, and what comes next after a squeeze is a big breakout. The rising and falling wedges work with the concept of Bollinger squeeze. This is why I taught you indicators first, not so that you will use them to place trades, but so that you will use them to understand price action. This is how a rising wedge looks like on my chart, and as you can see in the second image, a big breakout actually occurred next after the rising wedge was formed. If you also bring out your Bollinger Bands, you will see that this is also a squeeze. So 3 ways to trade this is by reading the charts with your chart reading analysis, or if you cannot watch the chart because you are busy, you can use your call level app to set call levels, or using TradingView alerts. There is this thing called placing orders. You can place an order for a particular currency pair, and when the price hits that level you set the order to, the market will automatically be bought or sold. They are called sell and buy limit or sell and buy stop. If we check this video beside us, we will see what buy and sell stop is.
So, in this type of market, you want to place a buy and sell limit. The market is currently closed, but I just want to show you how to place your buy and sell limit and buy stop if you want to place them. So you just go to your trade as if you want to trade. This place right here that reads market execution, you click on it. Okay, you click on it. Currently instant execution or market execution is currently selected. So if you want to place a buy limit instead, you click on buy limit. Okay, I want you to note that when the price, okay, let me just explain it instead. Okay, this is your buy limit, this is your sell limit, this is your buy stop, and this is your sell stop. Okay, you just click on them and you impute the price you want to use as your buy limit, sell limit, buy stop, sell stop. So if you try to impute an invalid order, okay, this blue button is going to disappear. Okay, and I would explain them right after this video.
See this hour video on what a buy and sell limit and stops are. Okay, let's get back to the lecture. We were talking about rising wedges. Rising wedges are usually reversal patterns most of the time. This means once the wedge breaks and it breaks below, it is a signal to sell in the market. So once you spot that, your price has gotten to your resistance and you see a consolidation, try drawing trend lines around the consolidation to know if it is a rising wedge. If it is a rising wedge, the next you should do is to either set buy and sell orders or use your call level app or watch the chart by doing your chart reading analysis and waiting to see if you will get a sure signal to sell or buy, because it is 190% sure that the trend lines will break, but we are not sure about the direction. Hence, chart reading and the trend lines drawn on higher highs and lower lows will help you predict the next move. You can also bring out an indicator like stock and the likes just for confirmation purposes. As for falling wedges, these are just exactly like the rising wedges, but the opposite. As usual, you can explain these to me following the concept of the rising wedges.